Growers and producers face a number of challenges in budgeting and cash flow forecasting, including the ability to predict profitability from one period to the next, determine their seasonal funding requirements, including any capital expenditure and maintenance programs, determining the value of each harvest for calculating the standard cost of sales, matching their sales forecasts with predicted stock levels, and if required, purchasing stock shortfalls from external suppliers. So let's now look at an example of a winery to see how a driver-based forecasting system like Cash Focus helps manage these challenges. From the main menu screen, let's first look under Accounts and Budgets to see how the model works. If we click Revenues on the account map, we can see that sales are budgeted by domestic and export channels. By clicking on the Budget Setup tab, we can see that each revenue line is based on a set of price and volume drivers. Clicking on the Change button for MBO wines, we can see the pick list of price and volume drivers by variety. Clicking on the Equation Builder, we can see that the respective price and volume combinations multiplied out to calculate the revenue figures. On the Budget per Period window, the results are multiplied by 100%, enabling high-level what-ifs without the need to change the underlying drivers. On the right, the MBO sales profile contains the balance sheet accrual and cash flow calculation assumptions. In this case, cash is collected from MBO distributors on average 2 periods following the sale. Cash Focus uses these rules to build the profit and loss and the balance sheet and cash flows simultaneously. Under miscellaneous items, the price and volume drivers by channel are the key revenue and cost of sale assumptions. Although prices remain relatively constant, the volume predictions need to be coordinated with internal production targets and predicted bottle stock inventory levels to avoid stock shortfalls. If sales volumes are greater than the internal production, external purchase needed to be made or the sales levels reduced to avoid stock going negative. All drivers can be linked to Excel so that the price and volume data can be maintained by those responsible outside of Cash Focus. Under Cost of Sales, direct costs are grouped into cost of wine sold, direct and other direct costs. Cost of wine sold is calculated by multiplying the driver volumes by the standard cost of wine sold for each vintage and type. Direct costs include vineyard and winery costs, which are automatically accumulated and transferred to a work-in-progress inventory account called Harvest and Winery Costs. As these costs accumulate, they approximate the increasing value of each season's harvest. External purchases from other growers top up bulk and bottled stock inventory accounts to prevent inventory shortfalls. Bottling costs include labels and bottles are transferred directly to finished bottle stocks. Now, although these accounts are all required for cash flow and planning purposes, they have no initial profit impact and are included in the standard cost of wines sold. Other direct costs include ALEC tax, farm expenses, cottage and cellar door expenses. If we look under expenses, we'll see a typical list of sales and marketing items and administration expenses, including calculation of interest and depreciation. If we now go to the inventory area, we can see the work-in-progress accounts for vineyard and winery expenses. When the grapes are harvested, these costs are transferred up into the bulk red and white wine stock accounts. Here we can see a large value being transferred into 2012 red wine bulk account. As bulk stocks are processed, the values are then transferred up into bottled stocks, which in turn are linked to the cost of wine sold and sales. Here we can see a transfer into 2011 white wines bottled stock from 2011 white wine bulk. These transfers all occur according to a production plan. Transferring winery and harvest costs to bulk stock and finally bottled stock follows the production and sales processes. Sales less the standard cost of bottles sold produces an accurate monthly profit result. If we now go to the results, Cash Focus calculates the profit and loss balance sheet and cash flows for us. During the activation process, Cash Focus warns if there are any problems. Here we can see a message warning us of negative inventory balances. This is because we have insufficient internal production and bulk stocks to make the predicted sales volumes. The solution is to buy in more external wines. Looking at the profit and loss, we can see the calculated revenues by channel, is domestic and export market sales. We can see the cost of stocks sold by vintage and wine type. Direct costs, including vineyard and winery costs, are being transferred to our harvest work in progress costs, so they have a nil profit impact. Here we can see external purchases being transferred to bulk wines, and we can see the cost of bottling being transferred to bottled stock. The objective here is to make all direct costs in purchasing visible so they're not lost in the budgeting and cash flow planning processes. If we now look at the balance sheet, we can see the work in progress harvest accumulation costs being moved into bulk wines and bottled stock. Here we can see bottled stock being sold down and transfers from harvest work in progress into bulk stocks. What the negative inventory amounts indicate is a shortfall of stock requiring either more transfers from harvest production or a reduced sales prediction or additional wine purchases from external parties. If we now look at the cash flow report, we can see the revenue collection from our distribution channels, the payment of expenses including overheads and our direct winery and vineyard costs. We can see the impact of opening debtors collections and creditors payments, the impact of new funds introduced, and a capital expenditure program for building a new winery. The final result shows the projected bank balances and the level of seasonal funding required. The driver report shows us the up-to-date forecast sales, predictions and prices. Here are our forecast volumes of sales by channel. If we update the model with actual results, we can then print actual sales achieved and forecast sales by channel to the end of the financial year. If you would like to know more about implementing driver-based forecasting in your organisation, just order a trial CD now. Thanks for watching. Bye for now.